Well, yes, less than 20 days to go for the union budget to be presented in the parliament. It will be on the 1st of February, which is a Sunday this time, that Nirmala Sitharaman, our finance minister, will be presenting the budget. So we decided to take stock of how markets have performed from 1st February 2025 till date. And let's take a look at Nifty first. That has given a return of about 10% over the last 1 year. But remember, banking and financial services stocks clearly have outperformed this time around. Nifty bank returns stood at a solid 20% over the last 1 year. Mid and small cap index as compared to the broader indices was slightly underperforming. Small cap index return at just 4%, but Nifty mid cap, that one has given a solid return of 12% from 1st February 2025 to till date. So that's the kind of performance broader indices, benchmark indices have given over the last 1 year. Let's also talk about individual constituents which have gained the most and lost the most in the last 1 year. Starting with the Nifty 50 pack, we have Shriram Finance, which bucked the trend. It has given a solid return over the last 1 year of 81%. This is followed by Hindalco. That of course was led by surge in aluminium prices, up 52%. Eicher Motors from the auto sector was also doing very well, up 45%. BEL and SBI Life were also some of the other gainers from the Nifty 50 pack, gaining nearly 40 to 44 odd percent in the last 1 year. Shifting focus to other constituents that moved during the last 1 year, and Nifty losers includes the likes of Trent. Remember, growth has slowed down over the last 1 year, so we have seen a negative return of 31%. ITC, that too has declined. TCS from the IT pack gave negative return of 22%. Tata Motors PV and Wipro from the IT pack again have given negative return anywhere between 16 to 17% in the last 1 year. Shifting focus to other broader market indices then, mid-cap gainers, L&T Finance is at the top of that list, up 112%. That's the kind of return L&T Finance has given. Aditya Birla Capital at about, it has nearly doubled over the last 1 year. Ashok Leyland, Muthoot Finance and Nalco, all of these stocks have also given very solid returns in excess of 65 to 70% in the last 1 year. Shifting focus to mid-cap losers then, and as I mentioned, benchmark indices were underperforming, so something like IREDA, that one gave negative return of 31%. We have Premier Energies at 29%, RVNL, IRB Infra and Colgate giving negative returns of anywhere between 15 to 30% in the last 1 year. Shifting focus to the small cap index then, and we had a whole host of gainers from this index as well. Something like Hindustan Copper on the back of surge in copper prices that we saw globally. That one was up 120%. MCX again on the back of volume traction that we saw in the quarters gone by. It has nearly doubled over the last 1 year. Laurus Labs at 88%. IIFL Finance and Anand Rathi Wealth have also given returns in excess of 70 to 75% in the last 1 year. Small cap losers also has a lot of stocks, something like Tejas Networks, Ola Electric, Brainbees Solutions, NCC and IGI. So all of these have given returns, negative returns ranging between 30 to 55%. So that's the kind of negative performance that we have seen from the broader market indices. But as I mentioned, remember, banking and financial stocks clearly outperformed this time around. AU Small Finance Bank is at the top of that list, giving a return of 67%. Canara Bank, Union Bank, Bank of Baroda, Federal Bank. So it's a mix of public and private sector banks which has done really well this year. Returns of anywhere between 40 to 70% that we saw over the last 1 year. On the losing side from the Nifty Bank, remember we have only one stock and that is IndusInd Bank. It has declined nearly 10%. So that's the kind of move that we have seen from the broader markets and from the index level. Indices, of course, have performed well, but banking and financial stocks have outperformed this time.
Okay, thank you so much for that, Ashesha. And